Hello, everyone. This is Eden, your realtor for life. Thank you so much for listening to this timely subject that I'm here to discuss with our mortgage specialist, Sean Malachi. Hi, Sean.
Hi, Eden. Thanks for having me. How are you?
I'm wonderful. How are you?
I'm great. My name is Sean Malachi. I'm a mortgage broker and a certified financial planner with the mortgage management team. And we're here to discuss some of the stuff that's in the news today. I'm
You got
excited
it.
about it.
Excellent, excellent. Yeah, capital gains tax 2024. That's what we're going to talk about. A lot of people are talking about it. I mean, I believe that change happens in a lot of sector here in our, market, financial market. However, we're going to focus obviously with the real estate part of it. So, Sean, please go ahead and tell us what is the difference that was implemented or proposed for capital gains tax for 2024?
Well, in the budget for 2024, the federal government introduced an increase in the capital gains tax. So far, all the Canadians are taxed on 50% of their capital gains. So if they sell a property, and this is going to affect us a lot because we are in the real estate and real estate costs a lot. And most of our capital gains a lot of it comes from real estate. So it's going to affect a lot of real estate investors. So starting June 25th, if it passes, it hasn't passed yet. Right. So the budget is there. They got to vote on it. They have until June, sometime in June 23rd to vote on it. So once it passes, the way it works currently is that 50% of your capital gains is taxed. After June 25th, 50% on the first 250,000 is going to be taxed. And then anything after that is going to be taxed at
66, yeah.
66.6, so 2/3. So let's not, so you're not going to be taxed 66% on capital gains. We say if you have a property that you sold, you bought, keeping the numbers just simple, 500,000, you sold it for 800,000, there's a $300,000 capital gain. Before June 25th, $150,000 is capital gain. It's taxable capital gains. It was $300,000 capital gains. Taxable capital gains would be $150,000, 50% of it. After June 25th, because up to 250,000, so 125,000 of it, it's going to be capital gains, and then the other $33,000, the other $50,000 is at 66%, which is $33,000 is going to be taxed at your marginal tax rate.
Right.
Did that make sense?
Yeah, no, it does. It does. So the real difference is before you used to pay, again, by the way, I'm sure you're aware, when we talk about capital gains tax, we're not talking about our principal residence, the home we live in. This is for your investment property. So the government wants a share of your net profit when you're selling your investment property. But how much of it? This is what we're discussing about. So if you're selling your property, like the way Sean stated, if your net profit was 300,000 before, this new rules used to pay 50% on the 50% of that amount. But right now, for the first 250,000 gain, you will pay 50% income. You'll be taxed on that amount. On the balance, it will be almost 67% that you're paying tax on. Is that right?
That's correct. I just want to say a quick disclosure. I'm not an accountant. I'm not giving any kind of tax advice.
Yeah.
I read the budget like everyone else. I'm a certified financial planner, and this is just my information. Always discuss any kind of tax issues that you have with your accountant. But
Thank
yes,
you so
that's
much.
correct.
I meant to put that disclosure, and we'll put that down. So again, I am thinking for my family here. Like, as I say, I've been in the business for over 33 years. Most people that are listening to here, they're like my family. And we have learned over the years, nothing like real estate kind of made money to people, right? Even though there's labor, love labor, right? So I want to ask you a question. Let's say somebody bought their property, like 10 years ago. right? And now I'm sure there's like double, the price has doubled, right? They paid for 500,000 and now they're selling it for $1 million. Tell us, what do we consider net money? You know, that will be charged capital gains tax on.
So 500, well, you got to remember, friend, when you bought a property for $500,000, what cost did you incur to buy that property? The legal fees, all that stuff is added to your cost. Now, after you bought the property, did you make any capital changes? You have two expenses when you own a real estate investment property. You either have your current expenses, that's your heat, hydro, maintenance, taxes, mortgage interest, or you have capital cost expenses. That's like if you change the windows, if you change the floors, if you do major renovations. So all that money that was spent is going to be added to your capital cost. So ultimately you bought it for 500. Who knows, maybe by the time you sold it, it was actually 700 because you did spend a lot of money on it. I bought a property for 720. Right now my capital cost is 1.3 million because I got it, I developed it, I made it into a totally different property. So my purchase price was only 720, but my capital cost today is 1.2 million. So you just add that stuff. Also, when you sell it, what expenses did you have when you sold the property? You have to pay realtor fees, all that comes out of it. So ultimately then you figure out your net gain. So if you bought it for 500 and ultimately costed you 700 by the time you were done, and now you sold it for $1 million, but it's actually a little less, you got to find out what your net gain was.
Yeah. So from that example you gave, if you purchase it for 500,000 and you spend about 200,000, like you did a basement apartment, you did the windows, furnace, like major. So you deduct that let's say that's 200,000, right? So now, even though the property sells for $1 million, right? You subtract all those improvements. So your capital cost was about 700,000, right? So the net money is 300,000. However, you could deduct lawyer's fee, financial, fee, like, I mean, in a sense, what you pay for penalty in terms of this
mortgage penalty, definitely.
Yeah. And also lawyer's fee, pretty much your expense to buy it and to sell it. You take that off. Now, the capital gains tax payable is on that net gain. Is that right?
Yes.
Yeah. So in this case, we said it was 200,000. Sorry, 300,000.
Well, why don't we use 300,000 because then we can use the old rules and the new rules.
Yeah, but if you made any money under 250,000, it doesn't affect you. The new change does not affect you. Is that fair to say that?
The change doesn't affect you. Still, you have to pay taxes on it, but the change doesn't. If you made up to 250,000, you don't have to do. There's nothing has changed for you.
Yeah, the same rules apply. So let's talk about that. I mean, 200. When I sell the property, investment property, if I met net money, even 250 or 300,000, what I have to go to my accountant and tell them, hey, I made this much money this year, right? So that will be added to my current income. Now I have to pay tax on that amount that I collected, which would be almost, if you made 300,000 net, you pretty much, I don't know what percentage
you're at the top high tax bracket, but it won't be 300, remember? So the way it works, if you make $300,000 based on the old rules, $150,000 is income.
Right.
So if you're at 40% tax bracket, you're paying $60,000 in tax. Your tax for a $300,000 gain is $60,000 to the government.
So what would be? For
40% of 150 is $60,000.
Really? For 150, because it would be 50% plus,
50% of. So on the old rules, if you had a gain of $300,000, your taxable income would be 150. If you're at 40% tax bracket, some people are more. If you're a high earner to begin with, that's going to be more like 56%. But But just using an average of 40%. If you're at 40% on 150, you're going to be paying $60,000 on the old rules. On the new rules, Up to 250 is only half of it. So 125 is going to be at 40%.
Right.
Which is going to be 125, 40%, that's $50,000. The remaining $50,000, you made $300,000, 250 is at only 50%, the $50,000 remaining is at 66%. So 66% of 50,000 is $30,000, $33,000.
Right.
So $33,000 at your tax bracket of 40% is 13,200. So when you add them together, you're paying the government 63,200 in the new way, and 60,000 in the old way.
I mean, first of all, you're so brilliant how you add up all this number with your head, because I would have needed a calculator to add that up. So it doesn't seem much difference. I don't know. I'm gonna try to actually make a table of, for income, what tax you would pay, which is, and of course, like you say, consult your accountant if there was any way where you could be able to pay partially or invest it somewhere else, like we talked about, vendor take back, hold a mortgage for, the purchaser that bought for you, so that you make your tax payment yearly as opposed all at once, right? So, again, the accountants will have a strategy depending on your particular situation. So yeah, if you happen to have any additional question or anything else that I forgot to cover here, please feel free to call Sean. I'll go ahead and have his contact information here for you. And also we'll have a lot of different articles for yourself to read in regards to this new change. However, my understanding is that June 25, either this thing will pass or not, right? What is it that I heard about? It's not legislative, so a lot of investors are a little bit confused on.
Yeah, it hasn't happened yet, but it could happen before then. They have until June 23rd to vote on it once they pass this House. So it's going to be implemented, but it has to go to another. I believe it has to also go through the Senate to become a bill. But it's not there yet. Hasn't happened yet. People are not happy with any more taxes. Right. I'm not sure if it's going to be a unanimous decision on this, like a unanimous yes. Who knows? I'm sure a lot of people a lot of Canadians are house rich, and you're just, or they have investments in real estate investments, and you're just hitting them where it hurts. So it's coming and taxing that on top of other taxes that we've had this year. It might be too much. So we never know, but it might not pass.
Yeah. Well, okay, so one way to find out, wait for a couple of months for us to know, a month and a half actually, 2 months actually, to really find out how this will play. So Sean, thank you so much again. As I say, your wealth of knowledge. Just in addition to this capital gains tax, is there any additional information that you have, especially about the first-time buyers, home buyers plan? There's another proposal for that sector of our community as well, right?
Yes, in the budget, one thing that it was very good that the government came out with was for the first-time home buyers, the home buyers plan specifically, they increased that limit from $35,000 to $60,000 per person. So that's going to help out a lot, especially with these prices, being able to access that tax-free, and then be able to use that toward your down payment. A couple can use up to $120,000 for their purchase. They also added that paying it back in the 15 years doesn't necessarily start on the second year. You can start it as late as the 5th year, which is good. Gives you more time. Again, you need money for your retirement. The sooner you pay it back, the better it is, because you need to build that. But it helps out a lot, increasing that limit.
I definitely love that one. So in addition to that, RSP 120,000. If you use the home buyers plan savings account as well, that's 40,000. It will be about 160,000 down that you could potentially have. Is that right?
Yes, correct.
So to be honest with you, what I didn't know was it says this plan started from January 2022. I didn't even know that. Now it goes to only December 2025. So
yes.
It's a short-term thing. So pretty much we have a year and a half for first-time buyers to exercise that. Is that right?
Yeah, the home buyers plan, no, we have access to it. We have had access to it for a while, and it's going to stay here. They just increased the limit from 35,000 to 60,000, and they're paying back with it.
Yeah, but this increase, this allowance is only for till December 2025.
Anything after 2020, April 16, 24, you can do it. So you're entitled to use it anytime. It was introduced in April, but I believe anytime for 2024, after that date, you can take out up to $60,000 of your RSPs and use it for first-time home buyers.
That's good. That's a really good plan. Thank you so much. And so pretty much we discussed, last time halal mortgage, and we just discussed right now capital gains tax 2024 and first-time buyers home buyers plan. Any other? I mean, that's a lot already. Is that any other thing you want to add? Before I
No, they also said first-time home buyers on new properties, they can go up to 30-year amortization on insured mortgages. That's helpful too. So they're doing things that's going to help us. They should, as Canadians should be able to buy homes, especially first-time home buyers. That's one sector that has decreased and decreased and decreased over the years. It's not right. Home ownership, it's pretty much should be a right. It's to Canadians, and we are getting so far away from it. So I like to see more stuff like this that's going to help, especially our first-time home buyers get into homes.
Me too, Sean. I think that's a great plan. Thank you so much again for taking time to come and educate us on mortgages and capital gains tax. Thank you so much. God bless, and we'll talk again. Thank you so much, audience, for listening. Any questions that you have in regards to buying, selling, mortgages, or capital gains tax, I'd love to hear from you. My number is 416-918-5979, and I'll have all Sean's contact information for you as well. Thank you so much. You take care.
Thanks for having me. Take care. Bye-bye.
Thanks, Sean. Bye-bye.